Welcome back to the channel, team. Will tariffs, will volatile interest rates? We already know the housing market is struggling with affordability. Buyers are having the issues of trying to actually buy a house with all the cost of everything kind of thrown in the mix, and you bring in a 7% plus 30-year fix to someone with good credit. And all along the lines, we've noticed that has caused a wet blanket effect on the housing market. So what we're going to talk about this week is the housing market, the big summer moving season here in Orlando, as we're heading into it right now, is facing challenges? Is it going to do okay with all of the volatility? Behind the scenes behind that, a top story this week, Zillow came out and broke a story saying they're going to battle with companies that are attempting to hide listings, that are attempting to pocket and give premier access to specific people kind of inside of some of these companies. It's often been rumored that many of these offices and companies will have access to private actual inventory that does not hit in terms of public terms, which you can see when you're shopping on all these websites like Zillow and Realtor.com. Zillow and Redfin and some of the largest brands in real estate went to battle on that this week. I'm going to show you exactly what that story is unfolding. And then unfolding this week, we had a major advancement and announcement of one of the most exciting communities to ever hit for residential, meaning you can actually buy and live in this community. And it is in a normal, regular, run-of-the-mill, full-time occupancy type community. This is not kind of what I'm getting. Gary, you're building something up. What are you saying? Huge, big lagoon style community. Like imagine Caribbean beach in your neighborhood. The largest in Central Florida is on the way. It's coming to a specific city. And again, it's going to be far away from the Disney crowd. I'm going to talk about that today. We're going to take a roundup on exactly what is going on the pulse of the housing market in Orlando. In this video, I'm going to show you what to watch for if you're buying or selling in the housing season. I'm going to show you exactly how Orlando's trending. I'm going to give you a sneak peek into the data that's happening across America, because if you haven't been paying attention, I'm going to share it for you. There is a big shift around the country. So a lot of the people that are outside in the north or outside in the west, northwest, looking down in Florida and looking down at Texas saying, aha, you guys, your lives are changing. You got more inventory than pre-pandemic levels and all of this. And they themselves have been operating kind of in the concept of a shortage. The days are numbered. I'm going to show you exactly what the data is saying. So let's jump into the top story of this week that I want to talk to you about. Besides the Zillow story, that is a fascinating story, banning private listings. Look at this. Builders are confirmed for a community with Lagoon amenities. It goes on that Metro Development Group, has confirmed DRB homes, which I'm just starting to see the signs. I mean, maybe folks, you've been seeing DRB. I have not seen DRB in Central Florida, but they're here. Lennar, D.R. Horton are going to be the first 3 home builders to build at Kissimmee Park, which will be Central Florida's first master plan community with a giant lagoon swim amenities. Now, let's talk about what's in it, okay? Because the first phase is going to be a 20-acre site on the corner where their lagoons will be built. So 20 acres dedicated to lagoons. They're going to have a K-8 charter school planned. They're going to have almost 3,000 homes planned. And let me show you where this is. Okay, so you have downtown Orlando proper right here in the middle of this map. If you scroll all the way down, you can see we're going towards the St. Cloud Marketplace. So St. Cloud's downtown area is right here at the base of East Lake Tahoe. Now we're down to the southwest of town. This is maybe a 15-minute drive. This is Cross Prairie right here. If you're familiar with the community, it is out this way. This is wild, folks. This is pasture land no more. This is a little bit east of the West Lake Tahoe area, and they are filling this out. I've been giving you updates too. Further back down here, there is a huge marina access that was just approved for the base of this side of the lake for another community that's supposed to pop up right here, I think across from Friar Cove Road. And again, don't hurt me in the comments, St. Cloud, if I just misquoted that road. But it's going down right there. So right here you have Murata. This is actual product out of San Antonio. You can see it's the lagoon style features. Again, this kind of reminds me of Evermore. We have a community called Evermore that's right out of the gates of Disney. But again, this is going to be more built to attract people who want to live in a owner-occupied area with high-level amenities. Okay. And again, this is an idea. The same company behind this neighborhood you see on the screen, the same company behind this pulls builders together, and this is what their goal is for St. Cloud. Zillow's threat to ban private listings set the stage for real estate battle over home listings. Compass, okay, so they name names. Compass Real Estate with a large footprint in Pittsburgh. And again, this is a Pittsburgh read. And I like this article. They did a good job. But Compass is actually a national brand. They're second, third in the list for largest selling companies. I think eXp Realty is at the top of the list. But this is a company that is a formidable size business that in a recent move sent a bombshell through the world this week in real estate. Zillow announced that starting May 1st, it will blacklist any property that starts its life behind any private curtain. Okay. So here's what they're saying. This is the change. This company, particularly Compass, and Compass has been testing this for a long time. Their CEO has been going to conferences and saying, we want to hide property in our own. We want to bring it to our own base of our parties first. We want to basically say, if our agents have action for the property, we don't want to give everybody access to it immediately. I understand the business reasons for that. Okay. What Zillow and what other people on the outside are saying, you know what, if you don't basically share a property, like let's say a property has really good demand, there's a lot of people that want it, but you only share it to a part of the people, then it's not necessarily as good for the market as a whole, because the seller that has that property and doesn't actually have it exposed to everybody may not get as much money, may sell for less, which is actually our stated goal in real estate, is to help people make as much as they can on either side of the table, buyer or seller, whatever their stated goals are. Now, what Zillow will then do is set a new standard that will require any new listing be put on multiple listing service up front. Okay. So they get a listing, it has to go public, and then they can be allowed on Zillow. Zillow's saying, because here's the theory, and this is most likely accurate, is that if they started on some private platform first, it's not, a lot of them aren't going to sell, right? They're going to need a wider market audience. So Zillow's like, okay, so what's funny is you're going to start it over there and see if you can just get low-hanging fruit to be picked, and at your advantage, we're going to, and then you have to ultimately bring it to the rest of the public, which means, when they put it in the MLS, it's then invited to thousands of other realtors, their clients, and just litanies of websites that are tied to that. I'm talking any city in the world has so many websites, search websites, that if they put your home on the market in their MLS, it then gets rippled all over the place. So any home search site that exists that's tied to that MLS is going to have access. All right. So what do you think about this? Bad idea? Good idea? Do you like the idea of some companies trying to portray early on the notion that they're going to actually hide listings? And so that's an interesting thing. Now let's jump into the news on the housing market. All right. You'll remember last week that we had all this tariff announcements come out, and it got crazy, and the interest rates surged 0.5% at the end of last week. They have since come down. In fact, let me show you that, because that is kind of important. You can see right now that this was the prior week. It was down here. 30-year fix was 6.6%. In a week, it took off 0.5% and stopped at around 7.07%. The good news for the housing market is it literally almost immediately, a lot of those tariff announcements, a lot of them were reversed, right? You remember all this? They rolled it back. And so in real time, this ultimately came back. So it's now about 6.86%. Good news for the housing market there. But let's talk about housing in Florida, okay? I have been pulling on a regular basis the housing data here, and on a weekly basis, hand pulling it in real time, the actual marketplace of what supply looks like and things of that nature. So take a look at this. 1 week to the next, this is the most recent poll. The active supply of homes from $0 to $500,000 has dropped a little bit, and the over 500 has increased a little bit. On the net, the entire inventory has gone up about 50 units or so in a week. The vacant supply of homes has dropped. That's another thing I want to watch, and I'll keep announcing this every week. I'll try to keep showing you this week after week through the summer, is how many vacant homes. Look at this. It's half of the marketplace is a house with no occupant in it, okay? Now, our sold in 30 days trend climbed in the past week. So going back 30 days, we sold a week prior in the entire Orlando metro. We had 2,358 sales. This week, we've gone up to 2,459 sales, and our pending also grew a little bit, okay? So you'll see months of supply has dropped, okay? This means it's gone a little bit more into the buyer's favor this week, okay? So last week, we were at 3.89 months of supply. And you'll notice, if you've been watching my channel throughout the year, we've been bouncing around 3.7, 3.8 in the metro area. You have to understand this, folks. There is a massive dichotomy in the amount of inventory in specific areas, okay? So a lot of the areas that had high growth, this is going to help you if you're a buyer or seller. If we had a high new inventory increase in the past 5 years, meaning there was a lot of permits issued, a lot of new construction, it was a suburban band of real estate, and more houses were added, think newer area, you have the higher end of this mix. That's level one. Level two, if you're in a short-term rental market, a niche market like that, you have higher supply because of market realities and because of number one, because in our marketplace for short-term rental, there was an increase in supply over the past 5 years. You say, Jared, why is increasing supply over the past 5 years affecting the housing market? I don't know, but it is. Okay. It's affecting it everywhere. So when you look at the national numbers, you're hearing the statistics right now are saying that by the end of 2025, across the entire country, the country's going to be back to normal levels of pre-pandemic income US-wide. Because remember, most of the story has been told so far is that the housing market is tight on inventory since the pandemic. It is an inventory shortage, okay? Now, most of that has been read for other regions other than the South. The South region has been raging back to normal. Colorado, Arizona, Texas, Florida, Louisiana, inventory is coming back. Georgia, why? Because we grew. We grew over the past 5 years. And the same impacts that we're seeing in Central Florida, we're seeing across the country. But the thing is, we're going to see what happens as we roll forward, because a lot of what's happening right now is you're seeing the market, the bond market specifically. People are expecting that maybe we're not out of the woods on insurance, on inflation insurance. Are we out of the woods in insurance? I don't know. But people are concerned that maybe we're not out of the woods on inflation. The bond market is having to sell higher and higher to attract people to buy the debt of the U.S. When that happens, it drives the 30-year fixed up. And I've told you this before, but here's the reality is that we are sensitive to those types of features. Let me show you one more thing before we kind of end this weekend review video. So look at this. This is the Orlando metro area, new listings. All the years prior, okay? The orange line right here was last year, 2024. New listings month after month hitting the market. The red line is 2023. That was the first and softest year when things slowed down. And this high green line is the end of low interest rates and when things started to simmer down in 2022. So you have 22, 23, last year, and this year. Notice that we took off in January and February with a high new listing count. You can see it just boom, shot through the roof. And then one of the things that we've been watching is the pending sales. Okay. So look at the pending sales in response. Pending sales took off the beginning of the year, still a little soft. I mean, it's tiny, minute amounts, but it has really been kind of the turnover in a lot of the marketplace has not matched the rest of the market. By the way, one thing I am tracking, I think you will find interesting, is this right here. It's called the fail rate, 30-day fail rate. This is how many sellers disappear when they don't get what they want. Okay. Right now, our fail rate is around 10%. Last week, it was 9.4. And this week it's 10.7. Okay. So that means 10% of the marketplace just disappears anyways, which is why you're like, what happens between this gap in between? A lot of times they just quit, a lot of times buyers just pull back or sellers pull back and they just don't finish the market. That's the thing that keeps the marketplace from having our inventory shoot sky high. One last component I do want to kind of describe for you is the dichotomy. And I kind of shared this last week. There's a huge variable between established communities and these high growth areas. Okay. You can have the high growth areas running 4 months of supply, meaning if they stop listing, it takes them 4 months to sell it off. And a lot of these pockets in the older areas where downtown Orlando, things of that nature, it's running 2 months. If you didn't see last week's video, I broke a lot of that down because there is a case of multiple things going on at once. And I'm thinking about actually doing a video. Let me know in the comments if you're interested in this and actually talking about how new construction is affecting this market. Because as I told you, the higher supply areas are high growth, new homes. And is it necessarily a good thing that these builders are pumping $40,000 in incentives on a sale price at $385 or $400,000? Is that a good idea? Is that a good thing for the market? So if you're curious about whether or not buying a new construction home versus a resale, the dynamics and the differences of how it affects you as a buyer, drop in the comments. Let me know if that's something you want to see. Give me topic updates as well. And I'll see you on the next weekend review. Thanks for watching. We'll talk to you on the next one.